Welcome everybody to the 40 Finance channel. My name's Jeff Beers. Today I'm going to be looking at Zoom stock here in 2020, trying to figure out at this recent run up, is Zoom stock still a buy when it's near $250? That's what we're digging into today. As a reminder, my stock picks and projections are my opinion only. Please go out and talk to a financial professional before taking on any risks in the stock market. However, if you enjoy stock market analysis, going deep on stock names like Zoom, personal finance videos, and investing ideas, then please subscribe to the 40 Finance channel. Thank you to everybody who's subscribed so far. All right, at this point, I'm going to assume that most everybody is familiar with Zoom, which is an online meeting/video platform that helps you to connect to your coworkers, friends, and family. Obviously, the need for that type of technology has increased significantly over the past few months with the pandemic that's going on. And really the boom for Zoom, if you will, comes from this all of a sudden increased need for online meetings as companies have had to go to work from home situation. And it didn't take a genius to figure out that Zoom was going to benefit from this different wave of behavior that was coming through. And in their recent quarterly report that came out in the early part of June, they documented just how much demand had spiked quarter one over quarter one of last year. You see some of the highlights here, 354% growth in customers. You had 300 million daily meeting participants in the peak time, and you had plus 200% quarter over quarter increase in meeting minutes. So to me, some of that is just going to be an obvious transition result of what happened in the world. But what we're going to try to look at today is, what does it mean for Zoom in the future? Was the pandemic the true gold mine for this company going forward? Have behavior changes equal to profitability and success? So that's where we're going to frame this. From an investor standpoint, nothing's more important than understanding how Zoom makes their money. So I grabbed a little snapshot of their pricing page to just do a quick review on. And the one thing that most people know is that your basic Zoom account is actually free, and you can have unlimited one-to-one meetings and 40-minute time limit on group meetings. So right out of the box, obviously in an effort to spur engagement, Zoom offers a fairly robust solution out of the gate for somebody who just has a small team that they work with. I mean, 40 minutes on group meetings, yeah, that's not going to cover every use case, but if you get creative, you can certainly use the Zoom platform without paying a nickel, particularly if you have a small company or if you're an independent person. Outside of the basic account, you get into the paid accounts, which you kind of get a feel for how this works. At the end of the day, you get charged for how many people actually host meetings. You know, the person who calls the meeting and sends out the invite. There's some variations on how many participants can hop on a meeting, but you're really looking at the business and enterprise side when you want to think about Zoom's future, because obviously if you can sell to one large corporation, let's just say 500 host accounts at $19.99, that's going to do a lot better for the business than trying to bank on getting people to go from free to paid in an individual standpoint. So for me, small, medium, large enterprise, that's where I like to see a lot of the money come through. So this to me is the big unlock for Zoom, is can they get closer to this right side of the pricing sheet, $19.99 and up, and trying to offer more in terms of security, ease of access, etc. That's where things really add up. I would even begin to question very slightly on the basic free account simply because you have the unlimited one-to-one meetings and 40-minute time limit. I'm sure Zoom has got a time on their calendar where they have to pull some of that back. There will always be free, right? But unlimited one-to-one meetings, I think you start talking about, can we do less? Can we bring that down to whatever, 20 per month or something like that? Can we get the 40-minute time limit perhaps down to 25 minutes just to avoid people using it free in abundance as opposed to jumping in and starting to pay money? All right, let's take a look at Zoom stock to see where it stands today. At the time of me putting this presentation together, the stock price was at $256. I think the stock market's down a little bit today, and that has already fallen into the 240s. We have a P ratio today of 1,519, which is much higher than you will see across many companies in the stock market. But it's important to say, like, hey, Zoom is profitable, right? It's good to see a P ratio number in there. 52-week range of $61 to $261. So you have a $200 spread in the 52-week range. Obviously, the world has changed quite a bit over the 52 weeks that range is incorporated. Forward PE, as an encouraging sign, drops all the way down to 204. Then trailing 12 months revenue, and I think that this is where we have to start thinking about Zoom. You've only got $828 million over the trailing 12 months. Now, 12 months doesn't encapsulate what's going on with the pandemic, but you still haven't generated $1 billion, which is where you start to see like corporate profits and stuff really spike a company to grow and excel. They do have $1.1 billion in cash and only $71 million in debt. So all good things on the balance sheet. Just need to get that revenue number up a little bit to match more what we're seeing on the market cap side, which is almost $73 billion. Okay, taking a quick look at the valuation metrics over the past several quarters. Today's trailing PE, which on this chart is slightly different, but it's 1,450. You look back over several quarters, and really that trailing PE is not too far out of line of what we saw before the pandemic. Forward PE also kind of falls in line at 204. You see back in April, you're at 322, January 222. So not something that really strikes you as like, hey, this is, from a PE perspective, this company's wildly overvalued. Price to sales, though, has went up relatively significantly. You're sitting at a 92 right now. That's been as low as 39 back in January. And then price to book at 81 is trending also quite a bit higher than we saw even back in January at a 27. So some of the metrics are showing a little bit of an extended valuation, but all in all, Zoom looks like their price might be fitting in with where we expected it to land. Okay, so let's take a look at the TipRanks dashboard to get a feel for what do the best performing analysts think of Zoom over the next 12 months. Shout out as always to TipRanks. I am a paid subscriber. I use it to check on things like hedge fund activity, analyst recommendations, news highlights, things like that. My affiliate link is in the description if you're interested in learning more and supporting the channel. From a Zoom perspective right now, we have 11 buys, 9 holds, and 2 sells. Median price target today at $215. And we have a high bar at $261 and a low bar at $105. So what this kind of says from a TipRanks perspective of sort of surveying analysts, if you got a high bar of 261, today's price I think was trending in the 240s. That's why you're getting a lot of holds right now. So you're getting, again, 11 buys, 9 holds. And I think what the market is starting to realize is Zoom has had a pretty extraordinary run up. How much gas is left in the tank doesn't mean it's a bad company, right? But if you're starting a new position, it may not be the best time to buy high, so to speak. Okay, so I got a couple charts here from the Zoom quarterly report that again came out in the beginning of June. And I think that for me, these are encouraging signs for this company. This particular chart talks about growing future revenue under contract. Long story short, what they pretty much have done here is they've taken Q1 of 2020, so the 3 months that just came through, and they're projecting how does that sort of stack upon each other into 21. So the way that they're calculating it, they have 377 million in a collection of different contract phases. They are expecting that number to go up to $1 billion by Q1 of fiscal 21. So this is obviously good, and it makes a lot of sense when you have a subscription business that you continue to add to the base and the fundamentals, and then slowly over time that turns into more revenue. All right, this next chart to me is where I believe Zoom has the biggest opportunity, and it's also going to be their biggest challenge in terms of growth. So talking about enterprise application, right? How many big companies can you get on board to build this into their systems and use it every day? Because typically when that happens, it's it's a longer path to get those folks on board. It's also typically, though, a longer path for them to come off the system, right? So if you're going to sign up for a corporate account for Zoom at, let's just say, an insurance company, a corporate insurance company, right? And you need to have 1,000 users who can create meetings. Once they get that implemented into their corporate world, you're sort of like guaranteed a 1-year contract, and it's likely going to turn into 2 or 3 years because the process of getting it into accounting and getting those bills paid is such a pain in the butt that nobody likes to make any changes to it. And what they're seeing at Zoom right now is in fiscal year 20, they had 405 customers with $100,000 in trailing 12-month revenue, 100,000 or more, right? So a company that's making enough money that they can pretty much write these things off, no questions asked. That number they expect to jump and almost double to 769. And then you look at the green circle here, they're anticipating plus 500 new customers, over $100,000 in annual recurring revenue, Q1 21 from Q4 20. So they've obviously highlighted it in their investor summary, which I think is very smart, because the more of these people that you get on, the better your balance sheet's going to be in the future. And while you might think to yourself that it's going to be hard for Zoom to compete when Facebook, Google, some of these other people are offering free things, where I think Zoom needs to play is security, right? Like how much can they lock down their platform for certain corporations by basically making it an internal tool only, and then how is data stored? All those things that Google and Facebook are not going to be able to do because they're trying to serve the masses of individuals. The win here, in my opinion, is more or less in the corporate space, so that they can just build the user behavior at home with the free accounts and then turn those into business accounts over the long term. All right, so what's the bottom line on Zoom for me? Well, after all of the headlines, this company is still not a billion-dollar company in terms of revenue. Now, they are projecting that for 2021, but it's important to understand the size that we're talking about. It's still a pretty small company, and those growth pains aren't as obviously hurdled as they would be for a company, a social media platform, for example, that builds on virality and can spread quickly. I think that with Zoom, you're talking about a path of behavior change, which has definitely started here in the pandemic, can it be sustained, and can they ward off the competitors? And speaking of competitors, Zoom has to deliver some sort of moat or build themselves some sort of moat as quickly as possible. And I'm sure they're thinking about this, right? But we can't just go on connectivity here. We can't just assume that I can fire up the meeting and talk to grandma or talk to my business colleague, that's the moat, right? That I can interact with them visually. It's got to come down to speed, security, intuitiveness, and ease of access. That's where I'm sure Zoom is focusing their time, but competition is also focusing on them. So you have to be careful with a stock like this, because their sort of unique selling proposition can erode quickly in a world where technology is moving very fast. All right, so bottom line for me, if I was a new investor and I was going to buy into Zoom, I would be targeting around the $200 price point, okay? I think it's run up pretty high. Even though the P ratio is showing that it's not as high as we think, I would still wait for some of the hype around Zoom right now to settle down, and I'd be looking to get a lot closer to 200 as opposed to 250. Ultimately, this is not a stock that I would likely invest in as a standalone play, only because I think the technology is something that can be reproduced or issued on other platforms, and it just takes away from that uniqueness. However, I'd be more than happy to get a small slice of Zoom in an ETF like QQQ or FDN, both of which I do hold. All right, hope you guys enjoyed this overview on Zoom. Please give me a like and subscribe if you did. I really appreciate all the support. We'll see you on the next video.